Being boring is underrated when it comes to investing. I'm May. I traded 13 years of corporate for financial freedom. And now I'm sharing practical money tips and showing you how to do the same. Most people think that investing is finding the next hidden gem, something that'll 10x overnight and completely change their portfolio. But honestly, that's not really investing. For most of us, that's considered gambling. It's a trip to the casino. Today, we're talking about the junk food of the financial world, speculative investments that look tempting but can leave your portfolio with a major stomach ache, especially for beginner investors. Let's get into it. First up, collectibles. Anything from toys, designer sneakers, Pokemon cards, or even rare coins. Trends fluctuate, and what might be an amazing investment one month can actually be a terrible investment the next. If you're just buying into the hype, that can be very, very dangerous. As big as you think the market is, as safe as you think the market is. If you know that market well, you can definitely hedge some of that risk, but you'll need to be willing to wait a down cycle, especially if you bought at the wrong time. No one wants to be left with an expensive and illiquid piece of paper. I'm not saying collectibles don't have potential, but you have to know the market and you have to know what you're buying. Buying into hype is not a strategy. When you buy into something because you see a ton of Instagram videos about it, all of your friends are buying into it, that is not a good way to be investing. Do it just because everybody else is doing it. That is a huge red flag. Now, if you are passionate about a certain collectible, if you know the market really well, you've been tracking the trends, you know what may be selling at a discount right now that has potential for appreciation in the future, that is different. But that takes time and resources, which for many people who decide to invest in the collectible space, they either don't have or don't want because they're not buying into the math, they're buying into the hype. Next, we have penny stocks. These are stocks that trade for less than $5 a share. It is, of course, considerably cheaper compared to buying, let's say, a share of Apple or a share of an ETF like QQQ or VOO. But here's the thing. Most of the time, these penny stocks, they don't have the right fundamentals. Their stock price is that low because there's little transparency on how they're spending their money or how they're even making money. Or two, they're built on future potential rather than where they are now. So it may seem like your dollar can go further, but they're highly volatile and they're extremely prone to pump and dump schemes. I like to relate this to baking. It's like baking a 4-tier wedding cake with expired flour. The foundation just isn't there. Finally, the last point is any high leverage trading, like naked options or Forex trading. Yes, you can earn higher returns, but they can also wipe out your initial investment in seconds. This type of trading requires much more analysis and much more focus on the numbers in order to get it right. So what's the right healthy meal alternative to all of these junk food investments? Like I said in the beginning, it's boring. Healthy meals are boring. Chicken breast and rice, boring, but it works. First, low-cost ETFs or index funds. VOO, QQQ, VHT, these are funds that give you exposure to a particular industry or to the entire market. Diversification is your friend. It'll help you minimize the amount of risk and exposure in your portfolio. And consistency. Automatically investing at a set cadence. Every couple of weeks, every month, every quarter. Getting in the habit of funneling dollars into your investment accounts takes the guesswork out of when you should purchase, getting it at the lowest price. At this point, you just want a dollar cost average and continue investing because the more time you have in the market, the better your portfolio will become. Think about it this way. Investing really shouldn't be a shot in the dark. It should be reliable, like a family recipe that took generations to perfect. Focus on the basics and let compound interest do the rest. Okay, be honest. What is the first hype investment that you've fallen for? I'll go first in the comments.